PayPal's down about 6% right now, but from what I understand, you're still positive on the company. Walk us through why.
Hey, Oliver, great to be with you. We still like PayPal shares here. We have an outperform, a $335 target price. This wasn't a beat and raise quarter as we've gotten so accustomed to seeing, but for good reason. There is an eBay merchant migration that has been pulled forward, and that's decremental to revenue. And so this represented an 811 basis point headwind to revenues in Q2. We expect to see continued headwinds in the 800 basis point range for Q3 and around 600 in Q4. But this is pulling forward this decremental impact into fiscal 21. So we see a cleaner growth story for 22 and a return to focus on these products and their contribution, the new product lineup and its contribution to revenue and the profitability story here for PayPal.
What's the most exciting part of that new product revenue line? What's going to be driving this story?
Well, we got an update from management that the super app refresh is code complete and that we should see rollout in the US over the next several months. This product will include features like a high yield savings account, 2-day direct deposit advance options. It'll have eventually potentially some tax interface for easing the crypto spend conundrum with respect to capital gains, et cetera. And so as we see these products roll out within a consolidated super app functionality and interface, we think that'll drive engagement, which is management's objective with this product.
The eBay thing is now priced in. This was just a function of investors maybe being surprised by this, that now that they understand those costs going forward, there's no more surprises around that subject?
I think that this was a headwind that was expected into future periods well beyond 21. And so as a result of getting this Band-Aid ripped off, as management said, flushing this out of the system, it's an opportunity to be able to focus on a cleaner story in future periods. And for us, that resulted in a bump in EPS estimates for 22, especially given that management's guide for 21 called for an increase in total payment volumes. It may not have resulted in increased profitability guide in the form of EPS, but for us, the greater volume is a greater opportunity for engagement and monetization once this headwind is out of the way.
Okay. The other thing I'm curious here, when you look at the top line, what about the overall growth rate there that compared to a year ago? I mean, it's basically the same, right? I mean, is that a good thing in that it's stable? It hasn't had some one-time bounce that's going to be impossible to keep up, or an investor's going to look around and see 20% as a pretty average top line growth and say, maybe I want to put it into a company with that top line growth that's not trading at an all-time high. Is that a risk here for this company?
We think PayPal is at the intersection of two secular trends, which is the digitization of payment infrastructure and the proliferation of products around digital payments, as well as a structural change in consumer habits. And those tailwinds, we think, have a lot of room to run. This is a thesis we've had across the sector, and PayPal, with its scale, it's now at 403 million accounts, 32 million of which are merchants. It's in a prime position to take advantage of this for years to come. So we're at the very beginning of the crypto transition. They cited the opportunity around central bank digital currency and to host platforms to work with governments to facilitate this evolution of the payments infrastructure across the globe. And so for us, there are so many different avenues by which they can monetize these structural shifts that we continue to like PayPal and think the growth story, top line and bottom line, has room to run.